Hey everyone, welcome back to Corporate Decoder, a place where we dive into the nitty-gritty of company filings to uncover the real story. And today we have a rather interesting filing from Beeline Holdings, Incorporated, that hints at some significant financial maneuvers. Before we dive in, if you are someone who likes to get the straight dope on what companies are really up to, consider hitting that subscribe button. We break down these dusty documents so you don't have to. And hey, our Discord community is growing fast, link in the description below, join the combo. So what is the buzz with Beeline? Well, on the 26th of September 2025, they dropped a prospectus supplement, a fancy word for saying they plan to offer and sell more of their company stock. Specifically up to $5 million worth of it. This is a brand new idea though. They've already been selling shares under an agreement from April 2025 with Ladenburg Thalmann and Company Incorporated acting as their sales agent. So far, they've sold a good chunk, about 5.5 million shares, bringing in around $7 million. This filing really hammers home that the 26th of September 2025 date as the day of the earliest event they re-reporting. It's kind of like the official starting gun for this new phase of selling stock. Now, Beeline Holdings Incorporated is the company we re-talking about. They reincorporated in Nevada and their filing number is 001-38182. Their IRS employer identification number is 20-3,937,596. It might seem like a lot of numbers, but these are just the official identifiers for the company. What are they selling more of? It is their common stock. Each share has a par value of $0.001, which is practically nothing. This is the stock that trades on the Nasdaq Capital Market under the ticker symbol BELNE. So when you see BELNE on your trading platform, that is the stock they're talking about offering more of. The main story here is under item 8.01, which is where companies report other important information that doesn't fit neatly into other sections. This is where the meat of the announcement lies. They are essentially saying, hey, we want to sell up to another $5 million worth of our stock over time. This line is crucial because it tells us they're not starting from zero. They've already successfully sold a significant amount of stock previously under the same agreement. This shows a consistent strategy to raise capital by issuing new shares. Investors should always pay attention to how and why companies are issuing new stock. It can be a sign of growth, but also a sign they need cash to operate. Ladenburg Thalmann Sweeney Co. Incorporated is their partner in this whole stock selling operation. They are the sales agent, meaning they are responsible for finding buyers for these shares. Beeline is paying them a commission for this service. Here is a key detail investors need to note. They're repaying Ladenburg a 3% commission on all the shares sold. So if they sell all $5 million worth, they'll be paying Ladenburg about $150,000 in commission. On top of that, they're recovering legal fees for Ladenburg, which could add up significantly. They've agreed to reimburse Ladenburg for their counsel, as fees not exceeding $50,000 up front, then up to $5,500 for each quarterly due diligence update, and up to $7,500 for certain terms including annual updates. That is a considerable chunk of change, just for the administrative and legal side of selling their stock. This is what is called an at-the-market offering. It means they can sell the shares whenever and however the market allows, which could be directly on the Nasdaq or through other trading methods. It offers flexibility, but also means the price they get for these shares will fluctuate with market conditions. This all ties back to a prospectus supplement filed with the Securities and Exchange Commission, or CC. This supplement is part of a larger registration statement on Form S-3. The file number 333 to 284,723 is their specific registration. It is essentially the official document that allows them to sell more stock to the public. Now, importantly, this filing itself is not an offer to sell or buy. It is just informing the public that such an offering is happening or is planned. The actual offer to sell will be detailed in the prospectus supplement. Under item 9.01, we see the filings exhibits. While the main content of this report is about the offering, they listed the standard accompanying documents you'd expect. Exhibit 5.1 is an opinion from their legal counsel, Nason Yeager, Jerson Harris, and Fumero Parr. This is a legal document confirming the validity of the stock issuance. Exhibit 23.1 is the consent of that same law firm, which means they agree to be named in the filing as having provided their legal opinion. And finally, Exhibit 104 is the cover page interactive data file, typically in inline XBRL format. This is for electronic filing and easier data processing by regulatory bodies and investors who use specialized software. Then we have the signature block. This confirms that the report is officially submitted on behalf of Beeline Holdings Incorporated. The signature here is from Nicholas R. Loser Jr., who is the Chief Executive Officer of Beeline Holdings Incorporated. His signature signifies his approval and the company's commitment to the contents of this filing. So what does all this mean for Beeline Holdings Inc.? Well, on the surface, it is a move to raise more capital. Companies do this for a variety of reasons: expand operations, pay off debt, or fund new projects. The fact that they've already sold over $7 million worth of stock via an at-the-market offering method indicates they are comfortable with this strategy and likely have a plan for the cash they are continuing to raise. However, investors always need to be a bit cautious with these types of filings. Issuing more stock can dilute the ownership stake of existing shareholders. If the company doesn't use the new capital effectively to generate growth and profits, the stock price could suffer. The 3% commission plus the legal fees also represent a significant cost in raising funds. Looking at the bigger picture, Beeline Holdings Inc. is actively participating in capital markets to fuel its growth or operational needs. This is a standard practice for many public companies. The success of this strategy will ultimately depend on their ability to deploy the raised funds wisely and deliver value to shareholders. We all need to keep an eye on their subsequent financial reports to see how this influx of cash impacts their bottom line. Alright, that's our breakdown of Beeline Holdings Incorporated's latest filing. What's your take on these numbers and what they signal for the company? Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.